Fubotv Inc., trading under the ticker symbol FUBO on the New York Stock Exchange, is currently experiencing a dynamic session. As of this moment, the stock is priced at $4.43, reflecting an intraday increase of approximately 1.14%. This movement is not just a random fluctuation, it's a signal, a whisper in the cacophony of the market that many might overlook. The common narrative surrounding Fubotv is one of a scrappy underdog in the streaming wars, a niche player focused on sports, constantly battling giants like Disney's ESPN and YouTube TV. The expectation is a perpetual struggle for market share, a David versus Goliath story with an uncertain ending. But what if that expectation is fundamentally misreading the current reality? What if the intraday uptick we're seeing today isn't just noise, but the leading edge of a much larger, more significant shift in how the market perceives this company's future? The reality is that Fubotv is quietly assembling the pieces of a business model that extends far beyond simple streaming. It's a convergence of sports media, online wagering, and interactive entertainment, a trifecta that could unlock exponential growth and leave the simplistic streaming underdog narrative in the dust. While many are still debating subscriber numbers, the real story is in the monetization per user and the ecosystem Fubo is building. This isn't just about broadcasting games, it's about owning the entire fan experience, from the pre-game analysis to the final whistle and even the bets placed in between. The market has been slow to grasp this, and that's where the opportunity lies. Today's trading session, with a volume already hitting over 2.8 million shares, is a testament to the growing institutional interest in this evolving story. We're seeing a tug-of-war between the old narrative and the emerging reality. The day's trading range, from a low of $4.35 to a high of $4.48, indicates a consolidation phase, a coiling spring of potential energy. The broader market sentiment, influenced by macroeconomic factors and sector-wide trends in media and gaming, is certainly playing a role. But to attribute Fubo's recent performance solely to these external pressures would be to miss the company-specific catalysts that are beginning to bubble to the surface. Investors who are simply looking at this as another streaming service are missing the bigger picture. They are looking at a caterpillar and failing to envision the butterfly. The question isn't whether Fubotv can compete with the likes of Netflix or Disney Plus on their own terms. The real question is whether Fubotv can carve out a highly profitable niche that those giants with their broader, more generalized content strategies simply cannot replicate. The expectation is that Fubotv is a minnow in an ocean of sharks. The reality is that Fubotv may be evolving into a completely different kind of predator, one that thrives in the very waters the sharks are only just beginning to explore. Let's delve deeper into what's driving this subtle but significant shift. The company's recent earnings reports, while not without their challenges, have shown a consistent ability to grow its subscriber base and, more importantly, its advertising revenue. This is a critical piece of the puzzle that many overlook. While subscription fees provide a steady stream of income, the real scalability comes from advertising and other ancillary revenue streams. Fubotv's focused sports-centric audience is a goldmine for advertisers looking to reach a highly engaged and demographically specific audience. This is a far cry from the scattergun approach of many larger streaming platforms. Furthermore, the integration of sports wagering, while still in its early stages and facing a complex regulatory landscape, represents a potential multi-billion-dollar opportunity. The ability to seamlessly integrate live sports viewing with real-time betting is the holy grail for many in the sports entertainment industry, and Fubotv is one of the few players with a credible strategy to achieve this. This isn't a speculative pipe dream, it's a calculated business strategy that leverages the company's existing infrastructure and brand recognition in the sports community. Those who are only looking at the quarterly subscriber numbers are missing the forest for the trees. The true value lies in the synergistic potential of these converging business lines. Many investors are still using outdated metrics to value a company that is pioneering a new business model. This is the classic tension between expectation and reality. The expectation, based on the old media paradigm, is that Fubotv is a high-risk, low-reward proposition. The reality, when viewed through the lens of a forward-looking integrated entertainment model, is a company with a significantly asymmetric risk-reward profile. Of course, this journey is not without its perils. The path to profitability is still a work in progress, and the company's cash burn rate is a legitimate concern for many investors. The competitive landscape is fierce, with deep-pocketed rivals who will not cede market share easily. Regulatory hurdles in the online gaming space could also present significant challenges. However, it is precisely this uncertainty that creates the opportunity. The market is pricing in a significant amount of risk, which is to be expected for a company in a high-growth, disruptive industry. But what if the market is overestimating the risks and underestimating the potential rewards? What if Fubo's management team, which has a proven track record of innovation and execution, is able to navigate these challenges more effectively than the market anticipates? This is where a deeper analysis of the company's fundamentals and strategic initiatives becomes crucial. The recent insider buying activity, while not a definitive signal, is certainly a vote of confidence from those who know the company best. The increasing institutional ownership is another indicator that the so-called smart money is starting to take notice. When you combine these factors with the company's aggressive product roadmap and its relentless focus on the user experience, a much more compelling investment thesis begins to emerge. Now, for those who are new to the Fubotv story, let's take a step back and understand the core of their business. Fubotv operates as a live TV streaming platform, often referred to as a virtual multi-channel video programming distributor, or VMVPD. Its primary focus is on providing subscribers with access to live sports events, which sets it apart from general entertainment-focused streaming services. The platform offers a wide range of channels, including national and international sports networks, as well as news and entertainment content. The business model is a hybrid one, generating revenue from both subscription fees and advertising. This dual-stream approach provides a degree of financial stability and a significant runway for growth. The company's past performance has been a roller coaster, with periods of rapid growth followed by sharp pullbacks in the stock price. This volatility is characteristic of a company that is still in its early stages of growth and is operating in a highly dynamic and competitive industry. However, to focus solely on the past is to drive while looking in the rearview mirror. The future of Fubotv will be defined not by what it has been, but by what it is becoming. The integration of technology, content, and interactivity is at the heart of this transformation. Looking ahead, the future outlook for Fubotv is a tale of two potential narratives. In one scenario, the company successfully executes on its vision of creating an integrated sports entertainment ecosystem. It becomes the go-to destination for sports fans, offering a seamless blend of live games, on-demand content, and interactive features like sports betting. In this scenario, the stock price could see a significant re-rating as the market begins to appreciate the true long-term value of this unique business model. The catalysts for this scenario include continued subscriber growth, increasing advertising revenue, successful expansion into new markets, and favorable regulatory developments in the online gaming space. The other scenario is one where the company struggles to achieve profitability, faces insurmountable competition from larger rivals, and is unable to overcome the regulatory hurdles in the wagering market. In this scenario, the stock could continue to be a volatile and underperforming asset. The risks are real, and any serious investor must consider them. However, the potential rewards, should the company succeed, are equally compelling. The key for investors is to weigh these potential outcomes and to constantly reassess the company's progress against its strategic objectives. So, where does that leave us today? The expectation is that Fubotv is a speculative bet on the future of sports streaming. The reality is that it's a calculated investment in a company that is at the forefront of a major shift in how we consume and interact with sports content. The current stock price, with its modest intraday gain, is a reflection of the market's ongoing debate between these two narratives. But as the company continues to execute on its strategy and as the market begins to understand the full scope of its ambitions, we could see a significant shift in sentiment. I want to know your take on this. Comment below with how many shares of Fubotv you currently hold or if you're considering starting a position. Your engagement and insights are a valuable part of this ongoing conversation. In conclusion, the story of Fubotv is a classic example of the tension between market perception and underlying reality. While the prevailing narrative may focus on the challenges and the competition, a deeper dive reveals a company with a unique and compelling vision for the future of sports entertainment. The journey will undoubtedly be volatile, but for those who can look beyond the short-term noise and focus on the long-term potential, Fubotv represents a